Hello and good day. Welcome to the Mutual Funds Cross-Selling Certification course. Today, we're going to understand the basics of mutual funds, to learn about BPI Investment Management Inc. and the various mutual funds they manage. We're also going to give you a refresher on the role of frontliners in the cross-selling of mutual funds and review operational reminders related to mutual fund account opening and transactions. To begin, what are mutual funds? Firstly, mutual funds are open-end investment companies primarily engaged in the business of investing, reinvesting, and trading in securities. As such, they have their own articles of incorporation, bylaws, corporate papers, business permit, board of directors, and are governed by the Corporation Code. An open-end investment company sells its outstanding shares and stands ready to redeem or buy back such shares from its investors. No need to look or wait for another investor to buy it from or to sell it to you. And secondly, mutual funds are collective investment schemes, otherwise known as pooled funds. A mutual fund offers investors the opportunity to pool their money with other investors in an investment that is managed by professional fund managers. Funds invest in stocks, bonds, or other securities according to each fund's objective. Investing in mutual funds enables those investing a modest amount of money to benefit from the same advantages enjoyed by large institutional investors, such as diversification and professional portfolio management, at a reasonable cost. All income and gains earned on the securities are added back to become part of the pool of money, and investors realize gains when they sell back their shares at a higher value for each unit of investment. The net asset value, or NAV, of the fund is calculated at the end of each trading day by adding the market values of the fund's holdings or assets. For example, a local equity fund would have investments in stocks such as BPI, Ayala Corp, and Globe, among others. A local bond fund would have holdings of Philippine government bonds or treasuries, Philippine corporate bonds, and time deposits in local banks. Once we have the total asset value, we would now deduct the liabilities, the fees, taxes, and other expenses payable by the fund. Total assets less liabilities would give us the net asset value, or NAV. The NAV changes each day based on the value at market close of the individual securities held by the fund. And finally, to get the fund's price, or the net asset value per share, we divide the NAV of the portfolio by the number of the fund's outstanding shares. The same concept applies to get the net asset value per unit if the mutual fund issues units of participation instead. In seeking higher potential return, investors turn to a mutual fund because of four distinct benefits that they may enjoy over investing in individual securities. So we have professional fund management, diversification, affordability, and liquidity. These four advantages make investing in mutual funds very easy. So in short, madali. Madali ang investing with mutual funds. First off, we have management. A mutual fund offers investors access to full-time professional fund managers who have the expertise, experience, and resources to actively buy, sell, and monitor investments. Second, diversification. Buying mutual funds is an easy way to diversify your investments across many securities. You won't have all your eggs in one basket. If one investment decreases in value, another investment in the mutual fund portfolio may increase. Third, affordability. For many people, it would be more costly to purchase directly all of the individual securities held by a single mutual fund. In contrast, the minimum initial investment for most mutual funds are more affordable. And finally, liquidity. Most mutual funds allow investors to buy and sell shares on any business day, so you have easy access to your money. You can even set up an automatic investment plan, known in BPI as the regular subscription plan, to help you gradually build your nest egg over time. Of course, the value of your shares when redeemed may be worth more or less than their original cost. Volatility is part of the investment experience, and higher investment value is normally achieved over a medium to long-term period. So, just a quick highlight on how investors earn from mutual funds. Investors earn from mutual funds via price appreciation. To illustrate, say by the end of 2019, you entered into a mutual fund investment with a contribution of roughly about 10,000 pesos. At a price of 125.78 per share, you were able to buy 79 shares of the mutual fund. Fast forward to June 30, 2020, about 6 months later, the price is now 128.15 pesos per share. Your 79 shares multiplied by the new price of 128.15 pesos per share gives you your new market value of 10,123.85 for an unrealized gain of 1.88%. Then we jump to December 29, the end of the year. The price has now increased to 129.81 pesos per share. Your 79 shares times the new price gives you your new market value of 10,254.99 for an unrealized gain of 3.20%. Remember though that all gains or losses remain unrealized and will remain subject to the change of the mutual fund price. You only get to realize or lock in your gains or losses when you redeem or sell back your shares at the prevailing price. Speaking of returns, here's a very easy formula for you to remember on how to compute for the return on investment. So, it's just the latest net asset value per share or fund price divided by the previous net asset value per share or your base minus 1 times 100 to get the value in percent. So let's look at some examples. So in this table, our latest fund price is as of September 30, 2020, which is 129 pesos per share. In computing for the past 1 month return on investment, we compare the latest NAV-PS of 129 pesos per share as of end September versus the previous month's NAV-PS of 128 as of end August. After plugging in the values to our formula, we should get 0.78% as our historical 1-month ROI. To get the year-to-date ROI, we use the NAV-PS of the previous year end of 125 pesos per share as our denominator. Again, using our formula, this should give us an ROI of 3.20%. And then finally, for the year-on-year or past 1 year return, we plug in the NAV-PS as of the same day the previous year. So we're looking at September 30, 2019. Plugging it again in our formula, that will give us an ROI of 4.03% for the past 1 year. So in investing, there are also risk factors. which can cause the value of our investment to decrease. So investors must weigh the risks versus the benefits before committing to a mutual fund investment. A mutual fund is an investment and therefore it is not a bank deposit. Therefore, the returns on the investment are not guaranteed and are not insured by the Philippine Deposit Insurance Corporation. Some of the key risks involved in investing are as follows. We have market risk, the possibility of loss due to adverse changes in market prices of securities. For example, a decrease in the price of a stock owned by the fund can have a negative impact on the fund's return or value. Then there's liquidity risk, the fund's inability to convert certain assets into cash immediately, or instances where conversion to cash is possible but at a highly disadvantageous price. We also have interest rate risk and reinvestment risk as shown here. Next, we have credit risk, the possibility of loss due to a borrower's failure to pay principal and/or interest in a timely manner on instruments such as bonds, loans, or other forms of debt security. And we also have country risk, the risk associated with investment in securities issued by or in foreign countries due to the political, economic, and social structure specific to those countries. We also have foreign exchange risk and related party risk as shown here. So as a rule of thumb, investors must consider the risk-return trade-off. The risk-return trade-off states that the potential return rises with an increase in risk. Using this principle, individuals associate low levels of uncertainty with more modest potential, and high levels of uncertainty or risk with higher potential returns. Therefore, you'll be glad to know that funds come in many varieties, designed to meet different investor goals and suit their comfort level with risk. If the investor's objective is capital preservation and liquidity, then you can find a mutual fund which invests in safe, though lower yielding securities. If the investor looks to generate income from stable returns, then there are also funds which invest in securities that provide a steady stream of income. If, on the other end, the investor's objective is to grow the capital over the long term, there's also mutual funds for them which invest in securities that can provide the highest potential return but would generally entail more price fluctuations or uncertainty. So let's get to know the different type of mutual funds in more detail. There are money market funds, investments with low risk and modest potential return. They are composed of time deposits, treasury bills, and other short-term bonds. There are also fixed income or bond funds, which are invested in debt instruments, generally with fixed interest rates issued by the government or private corporations. These are investments that provide stability and moderate income. Then there are equities or equity funds, which have the highest risk and also have the highest potential return over the long term. These are invested primarily in shares of stock of different corporations. And then finally, we have balanced funds, investing in both fixed income and stocks, and multi-asset funds, which invest in a portfolio of many types of securities. In terms of strategy or management styles, we have passively managed funds and actively managed funds. A passively managed or index tracker fund is managed with the aim of replicating the performance of a specific index. Passive fund managers won't make any active decisions as they're only trying to match the index. They perform well when the markets rise and poorly when they fall. passive funds generally offer lower annual management fees. An actively managed fund is managed with the aim of generating returns greater than the relevant markets as measured by an index. An active fund manager can select what they consider the most promising opportunities. They aim to maximize gains in rising markets and limit the effects when markets are falling. Actively managed funds typically have higher annual management fees than passive funds in return for the investment manager's potential to outperform the market. We also have some special types of mutual funds wherein, instead of directly investing in securities, the fund manager primarily invests in other pooled funds or collective investment schemes or CIS. A feeder fund is a mutual fund company investing at least 90% of its net assets in a single CIS. Whereas a fund of funds is a mutual fund company which invests at least 50% of its net assets in more than one CIS. And finally, apart from offering for sale shares to investors, a mutual fund company may also be allowed to register and offer units of participation. Here, investors are unit holders instead of shareholders. However, unlike shareholders, unit holders do not have voting rights. Mutual funds and UITFs are usually associated with each other as the two have a lot in common, given both are pooled funds overseen by a fund manager and their investors both earn via price appreciation. However, here are some key differences of mutual funds from UITFs. Mutual funds are regulated by the Securities and Exchange Commission and are distributed by SEC licensed distributors and agents. Whereas the UITFs are regulated by the Bangko Sentral ng Pilipinas and are distributed by UITF certified bank personnel. And where UITFs offer for sale units of participation in the fund, mutual funds offer for sale shares of the investment company, but may also offer units of participation for unitized mutual funds. Shares of ownership in mutual funds are subject to documentary stamp tax, which is not applicable to UITFs. In terms of valuation, mutual funds allow for a combination of accrual and mark-to-market valuation under the International Accounting Standards, whereas it's just the mark-to-market for UITFs as prescribed in the pooled fund accounting methodology. And finally, capital gains realized from the sale of mutual fund shares are tax-exempt, whereas for UITFs, they are subject to capital gains tax, which are already imputed in the NAV computation. Now, let's take a look at BPI's mutual fund manager, BPI Investment Management Inc., and the various mutual funds it offers. BPI Investment Management Inc., or BIMI, is a wholly owned subsidiary of BPI with over 46 years of investment experience. It currently manages 19 mutual funds and is the leader in the Philippine mutual funds industry with 54% market share. It services over 100,000 retail and institutional clients through its branch, agency, and wholesale distribution arms. The 19 BIMI managed mutual funds are composed of the ALFM mutual funds, the PAMI mutual funds, and 3 independent funds. And these range from local to foreign currency and spanning various asset classes. So let's take a closer look at the selection of the ALFM mutual funds offered in our branches. ALFM is known for its stability, particularly of its money market and bond funds. The ALFM money market and bond funds have a more stable portfolio that combines holdings booked as mark-to-market and holdings booked as accrual, While the prices of the bonds in the mark-to-market portion react inversely to changes in the direction of interest rates, the price of the bonds in the accrual portion do not, and the portion just accrues income at a fixed rate. This stability comes in handy especially when interest rates are on their way up. ALFM has a peso money market fund for investors who want to improve the yield of their short-term funds. The ALFM Money Market Fund is ideal for conservative investors looking for a parking facility for their idle cash. It is ideal for investors looking for liquidity and stable income for a stable horizon of 1 year or less. For the full year 2020, it returned 3.20% net of taxes and fees. The fund invests in short-term fixed income instruments such as short-term corporate bonds and government bonds, as well as time deposits. Next, we have our peso-denominated bond fund for investors who want to achieve stable returns over a medium-term period. The ALFM Peso Bond Fund is ideal for moderately conservative investors with a horizon of around 3 years. For the full year 2020, it returned 3.71% net of taxes and fees, and has been averaging an annualized return of 3.26% over the last 3 years. The fund invests in a diversified portfolio of intermediate to medium-term Philippine peso-denominated high-grade fixed income instruments such as, but not limited to, government securities, corporate notes and bonds, and fixed income funds. Investors in the ALFM Peso Bond Fund can also get a free life insurance worth 200,000 pesos for a minimum outstanding investment of 100,000 pesos. Eligible investors must submit a filled-up application form to BIMI, which in turn will be reviewed and approved by BPI Philem Life Assurance Corporation. Approved applicants will receive a life insurance certificate as proof of their coverage. After our Peso Bond Fund comes our Dollar Bond Fund for those who want to access US dollar-denominated corporate notes and bonds without sacrificing liquidity. Awarded by CFA Society Philippines as 2020's Best Managed Fund of the Year for the medium-term bond held-to-maturity valuation category. The ALFM Dollar Bond Fund is a defensive medium-term dollar bond fund which invests in high-grade intermediate to medium-term fixed income instruments. For the full year 2020, the fund returned 3.34% net of taxes and fees. An ALFM Dollar Bond Fund has generated an average return over the last 3 years of 2.77% net. The fund aims to achieve capital preservation through a steady stream of income by investing in a diversified portfolio of fixed income instruments issued by foreign and local entities. For more aggressive investors who look to ride the long-term growth of the Philippine economy, we have the Philippine Stock Index Fund, or the PSIF. The fund is passively managed, tracking the performance of the Philippine Stock Exchange Index. The fund went through a volatile year in 2020 due to the pandemic, falling more than 40% in the year as the pandemic hit, before recovering in the final months to end at negative 8.08%. However, looking at the long-term performance of the fund, we see an annualized return of 5.75% per year over the last 10 years. The PSIF is a convenient way of investing in the top 30 companies in the country, featuring blue-chip names such as Ayala Corporation, SM Investments Corp, URC, PLDT, and of course BPI, just to name a few. And finally, we have our newest mutual fund, which allows our investors to invest globally and enjoy regular dividends, the ALFM Global Multi-Asset Income Fund. It is the dividend-paying and feeder fund in the Philippine mutual fund industry, the first of its kind. The GMIF is a feeder fund that feeds into a collective investment scheme managed by BlackRock, one of the world's largest asset managers. The fund is suitable for aggressive investors who are looking for a blend of attractive yield and a focus on managing volatility. Even as the price dipped close to about 20% around March to April of 2020, it recovered to the end of the year to end at negative 1.01%. Despite the volatility, the fund was able to provide an income payout averaging nearly 4.40% in the past year. And despite what turned out to be a very challenging year during the pandemic, the fund was able to pay out its target monthly income for all the months of 2020. Investors in the GMIF benefit from the fund's Go Anywhere income solution. The fund's global multi-asset strategy searches out the best income opportunities around the world and across asset classes. In addition to stocks and bonds, the fund has a significant allocation to complementary sources of income. And that's a wrap for our featured ALFM mutual funds. Here is a snapshot of our discussion. And in addition to the funds that we discussed, other ALFM mutual funds available in the branches include our actively managed equity fund, the ALFM Growth Fund, and our euro-denominated mutual fund, the ALFM Euro Bond Fund. We now have a better understanding of what mutual funds are and how they work. We have also gotten to know the fund manager, BPI Investment Management Inc., and learn more about the ALFM mutual funds which are available in the branches. It's time for us to take a look at the role of our branch frontliners in the cross-selling of mutual funds. The Bangko Sentral ng Pilipinas, or BSP, recognizes that bank premises may serve as the point for the presentation and distribution of a range of financial products. Section 113 of the BSP's Manual of Regulations for Banks provides guidelines for cross-selling activities, which defines the responsibilities of banks for managing the attendant risks and upholding consumer protection. Cross-selling means the presentation and/or sale of a financial product other than the bank's own financial products to a bank client inside the bank premises through written or verbal communications. Collective investment schemes, or CIS, of financial product providers belonging to the same financial conglomerate may be cross-sold inside bank premises, namely mutual funds, UITFs, and variable unit-linked life insurance policies, or VULs. In the cross-selling of mutual funds, bank employees refer bank clients to the representatives of financial product providers. So branch frontliners conduct Know Your Client procedures, or KYC. They verify and capture the client's data before encoding it in the system and entering the client's transactions. Partnering with our frontliners are BMI's mutual fund advisors and BPI Bank personnel who are SEC certified investment solicitors. And finally, your BMI service and distribution officers review and approve the opening of the mutual fund accounts referred by bank personnel. So who are CSOLs, or the Certified Investment Solicitors? The Certified Investment Solicitors are authorized to sell mutual funds. CSOLs are natural persons of legal age licensed by the SEC and appointed by the fund manager to solicit, sell, or offer to sell the shares or units of an investment company to the public. Apart from referring clients, the role of frontliners will be to ensure that the following practices are observed to protect the consumer. First is to conduct KYC and to determine the real identity and financial situation of the prospective investor. And in the interest of protecting the consumer, conducting KYC also means getting to know your client in terms of their client horizon, investment experience, risk appetite, and investment objectives, or their hero. By making sure they go through the client suitability assessment and make sure that they get to accomplish the investment policy statement to formalize the client's investment philosophy. And to help the client, frontliners must make sure that they are provided with key information about the financial product to ensure proper understanding of its features, fees, and risks. The detailed information for each mutual fund is in its prospectus. This should be provided upon request of the prospective investor. Frontliners may also present to the client a more condensed version of the prospectus, which may come in the form of the product highlight sheet or the monthly fund fact sheet, or otherwise known as KIDS. These documents are available in the ALFM website or in the mutual funds database via Lotus Notes. Just a little bit more on the prospectus. A mutual fund prospectus is a document containing information about the investment company and detailing the investment objectives and strategies of a particular fund, as well as the finer points of the fund's past performance and financial information. Frontliners must act with due skill, care, and diligence, acting in the best interest of the clients and for the integrity of the market. The non-guaranteed nature of mutual funds should also be made clear to the client so they go into a mutual fund investment with a clear understanding of its risks along with its benefits. So before we end, let's just review some operational guidelines related to mutual fund account opening and transactions. Please be informed on the restrictions on U.S. residents and U.S. persons from opening mutual fund accounts. Provisions in the U.S. regulations require certain disclosures on investments made by U.S. residents and/or persons outside of the USA. To manage any potential breach on repertorial requirements, we shall not allow the same. Next, we have for your reference the checklist of requirements for opening mutual fund accounts. The list of requirements on the left is for individual investors, while the list on the right is for institutional or corporate investors. From the list of requirements, only 4 need to be scanned and sent to BMI via the mutual fund account monitoring mailbox. Ito ang makasama sa 4 dapat: the ALFM customer referral sheet, the mutual fund FATCA form, the valid ID, or for institutional accounts, the corporate documents, and the filled up NDB Excel template. Note that numbers 5 to 7 only need to be emailed if the client is classified as high risk. The rest of the forms are for branch keeping and need not be emailed anymore. And finally, let's go through some frequently asked questions. First off, where can I view the latest ALFM mutual fund prices and returns, the fund fact sheet, and the prospectus? So these 3 can be accessed either through the ALFM website, www.alfmmutualfunds.com, under the Download section, or via Lotus Notes in the Mutual Funds database. Next, what are BMI's contact details? BMI is in the 19th floor of BPI Buendia Center in Makati. For account opening concerns, branches may email mf@accountmonitoring/bpi, while for certification requests, branches may email mfcertification/BPI. The BME hotline is 8580-0900. For clients inquiring about their PAMI funds or accounts, our branches or clients may also get in touch with BME via the hotline 8580-0900, or they may email csols@bpi.com.ph for account opening and transactions, or bpi_investments@bpi.com.ph for general inquiries. And that's a wrap. Thank you for taking the Mutual Funds Cross-Selling Certification course brought to you by BPI Investment Management Inc. We hope this has helped you get a better understanding of mutual funds and the products available via our branches, as well as helped you to prepare for cross-selling mutual funds in the branch to help your customers find the right investments suited for their goals. Thank you and have a great day.